South Korea's benchmark stock index, the KOSPI, just suffered its most aggressive collapse in recent history. Over the past 30 days, the index plunged 37% from its June peak of 9114 down to 5698, wiping out over 250 trillion won in market value and triggering 7 circuit breakers. On its worst single trading session alone, the KOSPI plummeted 11.5%, marking one of its steepest single-day drops on record. The driving force behind this historic crash? Severe liquidations in South Korea's two chip-making titans. Let's look at the numbers. High-bandwidth memory leader SK Hynix plummeted over 15% in a single session, extending a brutal 30-day slide that has wiped out more than 50% of its market value since hitting all-time highs last month. Meanwhile, Samsung Electronics sank 13.58% in a single day, shedding over 37% across July. Why the sudden exit? Despite SK Hynix reporting a six-fold increase in quarterly operating profit, investors panicked over rising capital expenditures, client price ceilings, and lingering uncertainty over when multi-billion-dollar AI investments will convert into sustainable cash flows. So how do two stocks cause a 37% index-wide crash? The answer lies in extreme concentration. As of mid-2026, Samsung Electronics and SK Hynix combined reached a staggering 50.71% of the total KOSPI market capitalization, up from just 23.7% last year. To put that in context, the top two holdings in America's S&P 500 represent only roughly 13% to 14% of the index. In South Korea, just two semiconductor stocks dictate more than half the national benchmark. During this 30-day downturn, the semiconductor sector alone accounted for over 80% of total index points lost. Because these two stocks carry a 50% plus index weight, a pullback in memory chip demand forces algorithmic ETFs, leveraged funds, and retail traders to sell the broader index. Combined with WTI crude spiking past $90 a barrel and central bank interest rate anxiety, foreign investors executed a massive unwinding of Asian tech equities. When two stocks control over 50% of a country's stock market, sector volatility becomes a national market event. With SK Hynix down 50% from its peak and the KOSPI sitting at multi-month lows, is this a historic buying opportunity or the start of a broader AI correction? Drop your thoughts below, hit like and subscribe for more data-driven market breakdowns with AI Nova, and I'll see you in the next update.